Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risk. I will start with my prediction. I believe Taiwan Semiconductor Manufacturing Company will outperform the market over the next 5 years. Let's jump in. Taiwan Semiconductor Manufacturing Company, or TSMC, is the world's leading semiconductor foundry. The company manufactures chips for tech giants like Apple, Nvidia, and AMD. Its business model is straightforward yet powerful. It designs nothing but manufactures everything. This model allows TSMC to focus entirely on manufacturing innovation. TSMC's bread and butter lies in its advanced nodes. By focusing on cutting-edge process, TSMC ensures its customers remain on the bleeding-edge technology for performance and efficiency. Now, there are opportunities. TSMC's growth is propelled by several megatrends. First is AI demand. Revenue from AI accelerators tripled in 2024 and is projected to double in 2025. AI-related chips now contribute mid-teen percentage of total revenue. Then you have it diversified across platforms. High-performance computing made up 53% of Q4 revenue. This reflects TSMC's strategic pivot toward non-smartphone segments like cloud computing and automotive. Global expansion. With fabs in Arizona, Japan, and Germany, TSMC is diversifying geographically. These fabs cater to regional demand, including specialty and advanced technologies. Next, we have technology leadership. The upcoming 2nm and N2P nodes are poised to deliver 20 to 30% efficiency improvements, strengthening TSMC's competitive moat. But there are risks, and here are some to consider. First is cyclicality. The semiconductor industry is known for its boom and bust cycle, and TSMC isn't immune. While AI demand is robust, macroeconomic uncertainties could dampen other segments like smartphones, PCs, laptops, and IoT. Next is geopolitical tensions. With TSMC being a crucial player in the semiconductor world, US and China's tensions can be a variable for TSMC's growth potential. Finally is overseas expansion cost. While global fabs reduce risk, they come at a price. Overseas facilities dilute growth margins by 2 to 3% annually, driven by higher labor costs and supply chain inefficiencies. Now, here's where I share my thoughts. I believe TSMC will deliver a 10% annualized return over the next 5 years. This projection hinges on continued AI-driven demand, advances technology adoption, and its ability to mitigate geopolitical risk. Expect some volatility along the way. TSMC's reliance on cyclical industries means the stock could see sharp swings during economic downturns. However, its long-term fundamentals are rock solid. Now, to recap, TSMC's competitive moat lies in advanced nodes and fabless manufacturing model. Its growth is fueled by AI demand and global expansion and cutting-edge technology. The main risks are industry cyclicality, geopolitical tensions, and margin dilutions from overseas fabs. My prediction, TSMC will outperform the market with an expected 10% annualized return through 2029. At the Motley Fool, your comments make us smarter. Please comment with your own research and insight about TSMC and tell us what stock you want to see Crunch Time tackle next. Go to fool.com/invest to receive the top 10 best stocks to buy now.